Welcome to Chart of the Day. I'm Robert Folsom. The Treasury Bond. We forecast the turn from a 12-year low plus what followed. Here we have a futures price chart of the 30-year Treasury Bond or long bond from October 2022 through March 21st of this year. Bond prices move inversely to bond yields or interest rates, and of course the trend in bond yields reflects the broader trend in interest rates, meaning the bond market's relevance goes beyond bonds themselves. For example, this juncture last October marked huge long-term yield highs and price lows for bonds, and the ripples from this turbulent trend now include the banking sector crisis, which has recently dominated the financial news. So, let's back the price up to that pivotal juncture, specifically the Treasury Bonds low on October 24th. After the close that day, our short-term update said this to subscribers. Treasury bond futures have closed lower for 12 straight weeks, the longest consecutive negative closing streak in the history of the bond, which was first issued in 1977. The next 24 to 48 hours could be highly volatile for bonds. Today's low could end the downward pattern. Above all, be prepared for sharp, volatile moves in both directions in the coming days. In turn, volatile moves in both directions did follow for days from October into the first week of November. But then came a strong move on November 10th, and from there, the action showed that the trend had indeed turned on October 24th. The rally continued to a near-term peak in mid-December, followed by an apparent retracement. On December 19th, Short-Term Update offered this chart in commentary. Treasury bond futures and European government bonds tend to trend and reverse together as shown on the chart. Today's sell-off in the U.S. long bond is playing catch-up to the decline that has already occurred in the German 10-year Euro bond. A strong target surrounds 126.30 to 128. From there, the retracement continued to 126 and below, so on December 30th, STU's analysis said, prices have closed for 8 of the past 10 days. The next short-term target is just below where the market is trading. Here, the target held prices, and the upward trend resumed in a 3-week rally. Then, after several days of choppy action, STU said this to subscribers on January 30th. The coming wave lower will be a decline of approximately 5 to 8 points below the current level of 129.26. After a brief upward pop, the trend turned lower as forecast and a month-long decline to 122.22, or about 7 points below where Treasury bonds were on January 30th. March 2nd marked the low for this wave down. The next day, March 3rd, STU offered this forecast. Long bond futures have declined from the high of January 18th to yesterday's low of 122.22. The next wave will be a rally to at least 126.19. Higher potential exists. From there, the action unfolded higher, as STU had forecast. On March 20th, STU said this to subscribers. Long bond futures are at or very near the end of a rally from the March 2nd low. The end of this impulse pattern will lead to a price decline. This is where I say not all forecasts work out this way. Clearly, this is a still unfolding pattern in a volatile market, which is when Elliott Wave analysis is at its best. For more information about Short-Term Update, please see below for more about a financial forecast service subscription.